the BNPL thing that Amex adds in. It's a great example because it's like, first we draw this picture of like, this is how a credit card works functionally in terms of you're making your payments. This is when the interest is getting applied. This is, when you make when the statement, the cycle ends and then they give you your statement and then you make your payment. This is the payment amount you make. It gets subtracted. This balance carries over. More interest gets applied. So like drawing all of that out and then saying, okay, what happens when I need to charge this back and get a refund on this? How does that work? And then what happens when I, decide to pay the full amount instead of the minimum? Okay, then that happens. So like start to go through like examples that make it slightly more complex, but examples that are in the universe of like things you would do
Well,
as
what
a.
if you could pick and choose? Like I think about like my student loans before I refinanced them. I had 4 student loans and they were each different types of loan and they had different interest rates. And it was all actually managed through Navient, which is ironic since they bought my former company. I'd pay $100. I had no way to say like, I want $75 to go to the highest interest rate thing. I couldn't, there was no way to do that. And so it didn't do that. It just like split it equally. And so the higher interest rate item was hardly ever getting principal paid down because I couldn't actually allocate the way that I wanted the payment to be made.
Yeah.
So, all right, what if I tripled it? Like at what excess of minimum payment do I have to pay to have a majority of it go to the highest interest rate thing?
Right.